Hello, today we're going to look at problem 11-3, entries for bonds payable, including bond redemption. So basically we're looking at when we issue a bond, how that affects our journal entries and when we're paying interest on those bonds. Okay, so the following transactions were completed by Montague Inc., whose fiscal year is the calendar year. And the first one is year 2021, issued $55 million of a 10-year 9% callable bond dated July 1st of 2021 at a market or effective rate of 7%, receiving cash of $62,817,040. Interest is paid semi-annually on December 31st and June 30th. Now, that looks like a lot of information. So what we're going to do is take this and we're going to break it down into smaller pieces, okay? First, let's start with the easy part, our date, right? So it's 2021. If you hold down your Alt key and press Enter, it'll drop that down to the next line, and it is July. And we're looking at July 1, okay? I'm just going to make that row a little bit larger so that you can see the date. So it says that we've issued a $55 million bond, and it gives us the information, 10 years, 9%. We've received cash. Ooh, look at those words right there. Receiving cash of $62,817,040. Anytime we receive cash, we're going to debit cash, okay? So cash is going to be our debit of $62,817,040. Oh, that post reference column catches me every time because it's so big. $817,040. Let me do a little bit of editing here. I'm going to make that smaller so it doesn't mess with my brain anymore. And I'm going to turn these into, let's see, commas with no decimal points. Okay. Now that I understand what they are supposed to look like, we have our debit of how much cash we received. We've issued bonds. That means that we have issued a piece of paper to someone that says, you give me this much money and I'll pay you back later. Okay, so we owe them money. So we have our credit is going to be bonds payable. And we've issued bonds of $55 million. Okay, whoops, I have one too many zeros, which is why it's important to put the commas in there so that you can tell how many zeros you're typing. Obviously, our debits and our credits are not equal, right? Because 62 million does not equal 55 million. And our debits and credits have to equal. That's the basis of accounting, is to make sure everything is in balance. So we have something called a premium on a bond, and we have something called a discount on a bond. Please note that the problem we're doing right here works with a premium. What a premium means is that we have made money, okay? Notice we received $62 million for $55 million in bonds. That means we've made some money on this deal, okay? If we have lost money, it's going to be called a discount, okay? Please note that the assignment problem uses a discount. So some of the things you're going to do where we debit them or credit them here, you're going to do the opposite when you're working with a discount, okay? Right now we're working with a premium. We've made some money, so our next credit is going to be premium on bonds payable. And the amount that's going to go in there is for the difference between how much we received and what our bonds were actually worth. So again, I'm going to let Excel do the math for me. You're more than welcome to grab a calculator and do it that way. But I'm going to take the $62,817,040 and I'm going to subtract the $55 million, and I get $7,817,040. Okay, so premium on bonds payable. We've made a little bit of money on this one. The next entry says December 31st. We paid the semi-annual interest on the bonds. The bond discount amortization of $390,852 is combined with the semi-annual interest payment. Now, an amortization is what we do to bonds. It's similar to depreciation for our fixed assets that we learned about in Accounting 1, except this one's called amortization because it's happening on something that's not a physical, tangible object. Okay. So again, we're talking about December, so we need to fill in a new month. December 31st is our date. Now, it says paid the interest. So if we have paid something, that means we're going to be crediting cash. Okay, paid the interest. Excuse me. So we're crediting cash. Our debit on this one is going to be interest expense. We want to show in our accounting that we have used this money as an expense. Okay, so we have interest expense, and our interest expense amount, excuse me, we're going to leave blank for right now. Okay, we're going to have a second debit in this case because remember, we made money, we had that premium. So our second debit is going to be premium on bonds payable. What this means is this premium that we have right here, we are going to amortize or depreciate, if that word makes a little more sense, even though it's not the correct term, you might understand it better that way, a certain amount of this premium that we have made. Okay, so if we look in our textbook, it tells us the bond discount amortization of $390,852 is combined with our interest payment. So that $390,852 is what's going to go in that premium on bonds payable debit box. Please note, if this was a discount, that would be a credit. Okay, if this was a discount, that would be a credit. Now, we said we've paid cash. Okay, so we have to credit cash. Okay. How much do we credit cash for? Well, we have to calculate our interest. Okay, it tells us on July 1st that we had a $55 million bond for 10 years at 9%. Okay, $55 million at 10 years for 9%. Now, also note, we are paying our interest semi-annually. That means every 6 months. So we're going to use that when we calculate our interest. So we're going to type in our equal sign. Again, you can do this on paper and with your calculator if you would like. I'm going to have Excel do my math for me. So I'm going to do 55 million. That's how much of the bonds that we issued. I'm going to multiply that times 0.09. I got that number by looking at July 1st because it's a 9% bond. Okay, that's my interest rate, 0.09. Interest is your rate times your time times your principal. We can flip that so it makes more sense for our equation. Principal times rate times time. So we have our principal, we have our rate, now we need our time. Time for this bond is every 6 months. Okay, we pay it semi-annually, so every 6 months. So our time is going to be calculated by taking 6 divided by 12. Now, we know that 6/12 is equivalent to half, to 0.5. Okay, but I'm going to type this out so that you can see. Sometimes it helps people's brains. I put that 6/12 in parentheses because in math, we want that to be done before they do anything else. Okay, parentheses come first. So 6 out of 12 months because it's a semi-annual bond. So principal, $55 million times rate, 0.09 times time, 6 out of 12, press enter. And I get an interest of $2,475,000. Okay, that's how much cash I'm paying. Now, obviously, not all of that is interest expense. Some of it is that premium that we talked about. My interest expense is going to equal, because your debits and your credits have to equal, the amount of cash I'm paying out minus my premium. Okay, that should give me a difference of $2,084,148. Okay, so that is what's going in our interest expense. That's how much money was actually interest. Next one, on 2022, June 30th, we paid the semi-interest on the bonds. The bond discount amortization of $390,852 is combined with a semi-interest payment. This sounds super familiar. It looks identical to the entry for December 31st on 2021. And that's because it is. So, whoops, I'm in the wrong box. 2022, We're looking at June, and it is June 30th. Make this a little bit wider. I'm losing the R on December. There we go. And again, an identical entry. So we have interest expense, the premium on the bonds payable, which they tell us is $398.52. Cash, which we're going to calculate. Interest expense is this one minus, whoops, this one. Oh my goodness. Okay, so again, identical equation, identical journal entry, okay? Our next question, 2022, December 31st, paid the semi-annual interest on the bonds. The bond discount amortization of $390,852 is combined with a semi-annual interest payment. So again, we're just making another interest payment. So it is December 31st. Whoops, it is December 31st. Interest expense. I'm gonna work smarter, not harder. Copy, paste. Okay. So we have now completed our initial entry for giving out the bonds, and we paid 3 interest payments. Okay. It is now the year 2023. On June 30th, we recorded the redemption of the bonds, which were called at 103. The balance in the bond premium account is $6,253,632 after the payment of interest and amortization of premium have been recorded. Record the redemption only. So what's happening is we're now taking those bonds back and we're going to give them some money. So we have to pay money here. Okay. It is 2023 and it is June 30th. Okay. Now, the first thing we have to record is our bonds payable. We are paying the people back and getting those bonds back. Up here at the top, we credited our bonds payable. So now we're going to debit it to show that we no longer owe that amount of money. Oops. The next thing we're going to credit, right here we had a premium on bonds payable of $7,817,040. We had a credit. We've debited $390 here, we've debited $390 here, we've debited $390 here. If we were to go through and do that math, we would see that the amount remaining is $6,253,632. Your book gave you that information instead of having you calculate it. We need to pull that amount out of that payable because we no longer owe that amount of money either. So premium on bonds payable is going to be a debit for that $6,253,632. Okay, so we have 2 debits, no credits yet. The next thing we know is that we are going to pay them cash. Okay, when we pay cash, we credit cash. So we need to find out how much we're going to pay them. First, we have to calculate that. So we gave them a bond of $55 million, right? $55 million. Our textbook tells us the bonds were called at 103. That means 103%. Okay. So we're going to multiply this by 1.03 because if we take 103%, move our decimal point 2 steps to the left, we get 1.03. Press enter, and it tells us that we are going to pay out $56,650,000. Obviously, those numbers don't equal. Our credits and our debits don't equal. So we have to show how much we gained on the redemption of the bonds. Redemption of bonds. Okay. That's also going to be a debit because we need our debits and our credits to equal. So I'm going to add up this one and this one. And then I'm going to subtract how much we paid, excuse me, and I get a redemption, a gain on redemption of 4,603,632. And it looks like I've lost my commas here. Okay. So this last entry has 4 pieces. How much were the bonds? How much were the bonds originally that we're pulling out of our payable account? How much was left in our premium account that we need to take out? How much did we actually pay? And what was the gain? Okay. Remember that this gain, 4,603,000, even though we gave the bonds out at 55, we had to pay 56. Remember up here, we received 62. Okay. And when all is said and done, if you were to add these two together, you're going to get that 62. Okay. Those two and all of these other premiums along the way. So this was our final gain. In giving out these bonds, we actually made $4,603,632. So you can see where offering up bonds could be a good investment option for a company. When you get to your assignment problem, another reminder, that one could possibly, most likely is working with a discount. So everywhere where we have a premium that we debited or a premium that we credited, it's going to be the opposite. Where we have a gain and we credited it, you might end up with a loss that you have to debit. So please make sure you're paying attention to the amounts of money and what numbers are larger and smaller so that you know whether or not you're debiting and crediting items. Okay? Have a fantastic week.